Hi, everyone. Welcome, Ed. I'm really thrilled to be here for two reasons. I feel like this is an industry that has been inventing and innovating since day one at an incredibly rapid pace, and I come from traditional financial background, market data background, and I feel like I've seen in the time that I've been working in the industry, which is just a year. I can't tell if that's a lifetime in crypto or just a couple of minutes, but I feel like there are so many parallels, and I've been able really to help bring my experiences that I've had living through the financial crisis, living through really, quite frankly, I was a lawyer at a content company during the internet bubble and burst, and so I feel like I've had the opportunity to bring a lot of that to Chainalysis and to the relationships that I'm developing with all of you. One of the things that has helped me actually really get up to speed on our industry is actually speaking with people who were steeped in it, but come from more traditional industries. And Ed is like the most fantastic example of that. And so I'm really glad you're here today. We're going to talk about lessons we can all learn from the experiences of traditional financial institutions and really other industries that have been through similar experiences. So Ed, I'm going to have you introduce yourself, but Ed most recently was the head of crypto and digital asset investment banking at Bank of America, but has had a really interesting career to get there. So tell us a little bit about that role, but also your trajectory into it.
Well, thanks. Thanks for having me. Honestly, I'm humbled to be here. So my introduction to crypto was really from a geopolitical perspective in the beginning. My background was I was a Marine infantry officer for about 12 years, and I graduated from the academy in 2001. So obviously went through a lot of that sort of geopolitical activity until I started banking in the summer of 2008 with specialty finance and the whole entire global financial crisis. So that was a really nice introduction to finance from the front seat of the crash, which I think trained me really on very esoteric asset classes. A lot of the conversations we're having about crypto now, it's, when I started, it was about mortgage-backed securities. That was $1 trillion market. Like, people didn't trust the assets, didn't trust the mortgage originators, and here we are. Like, it's still one of the most liquid asset classes in the world, right? It's been adopted by, certainly banks were part of that, but financial institutions, asset managers, and others. And a lot of my then development was advising firms with the rise of private credit. So private credit, as the banks pulled away, pre-crisis, financial crisis, there were about 17,000 banks in the US. Now there's around 4,000, a little over 4,000. So supply and demand imbalance for credit was pretty significant. So there was $300 billion worth of middle market loans. Now there's about 1.4 trillion, and that really generated from private capital. My interest around crypto developed in late 2016, just because there was a lot of geopolitical turmoil and I was traveling, and a friend of mine was getting paid as a software engineer and getting paid in Bitcoin. And he was South African and didn't want to take South African rand dollar risk.
Wow.
And to me, that sort of clicked as someone who's traveled the world quite a bit. If you didn't have access to the dollar and you had exposure to your own country of mass inflation, then it was a great store of value. So it was an interesting aspect as an asset class. And then obviously we saw a run up in 2017. But really what really sparked a lot more interest for me was the evolution of like smart contracts and Ethereum. And as I was advising all these large global alternative asset managers, you have seen this massive proliferation of financial technology, a significant amount of capital deployed into technological efficiency improvement in equity markets, but the debt markets overall still struggle from a lot of financial innovation. And so how do we think about smart contracts and tokenization efforts around that to inherently improve asset allocation and asset management and efficiency and operations. And so that was just intellectual curiosity, which then sparked organically into who's the guy in investment banking that knows anything about crypto? And instead of being the guy in tech, it happened to be a guy in financial institutions, and organically starting to help my firm, previous firm, start to think about the business opportunity. Obviously, Coinbase was about to direct list in the beginning of 2021. You saw a number of opportunities where SPACs were the flavor du jour of economic structures or business structures, and a lot of crypto firms were looking to try to go public through SPACs. You saw this maturity in the market infrastructure around trading around crypto. Obviously, Bitcoin price appreciated quite a bit. There was significant inroads in decentralized exchange technology and a number of protocols that were proliferating for higher transactions per second. And so it organically, as I was looking to develop and help build out our governance, our policy, how we think about interacting with companies, really started to map out the entire infrastructure or map out the entire landscape of the universe. So that was market infrastructure, quickly came to custodians and all the technology providers, then quickly looked to understand the NFT market, and then looked to understand the protocols because everything is an ecosystem and developed pretty quickly. So I spent 2 years basically fundamentally building out what essentially became a global practice.
Yeah.
So that's a very long-winded answer as well.
No, it's great, and the context is great because I think you're right that a lot of the conversation that we have about crypto is about crypto as an asset class, and some of what you referred to, we've also heard repeated this morning, yesterday, throughout the day about trust and transparency, and trust is a really big piece of adoption. And trust is a big word. It means a lot. And when you think about it in the banking context, you have a heavily regulated industry that needs to build trust, not just with its customers and investors and stakeholders, but also with regulators. And I think there are a lot of parallels to where we're living now. So talk about, you sort of brought us up to your interest and your excitement in the industry, your engagement in the industry. Talk a little bit about your sort of view of what's happened in the industry in the last couple of years, and maybe sort of parallel it back if you can.
Yeah, I think in a sense where beginning of 21, when people realized Bitcoin started the year out at I think 45,000, quickly went up to about 70,000 in price. And then obviously it's a very volatile asset class. What ultimately happened, there was about $3 billion deployed in equity in 2020 and venture capital or growth equity capital in the sector. When people understood this sort of market infrastructure had quickly developed and become way more sophisticated than they had realized, and you saw obviously a number of people staying at home and trading without having to go to the office or doing things,
right,
and transferring assets globally, there was a realization that this market infrastructure, to be able to move assets 365 days out of the year, 24/7, settling near instantaneously with minimal friction, is something that they should actually invest in. And you quickly saw, capital allocators trying to invest in this sector in a rapid pace. But I think ultimately what happened was there was a significant lack of education on understanding how to even diligence. And I think there's a very big semantic difference on definitions where you're looking at this is, once again, it's software. Like Bitcoin is software, Ethereum is software. And the technology and definitions and verbatim is really technologically based. And then you have traditional institutions looking to allocate capital. And sometimes semantically, it's different perspective on even just definitions.
Yeah.
And you run into that a lot, And a lot of my time was spent not trying to do deals, but really just to educate myself on those semantic differences. But a lot of the firms now realized, okay, we need to deploy capital in this space. We need to invest in this space. We see the opportunity for real world assets. We see the opportunity for the technological proliferation. And in 2021, you saw $29 billion of equity capital deployed.
Wow.
Right? And in 2022, you still had $26 billion. So $55 billion of equity capital deployed in 2 years. And I think that unlike normal technological firms or tech firms, where it takes quite a bit of time for developing your minimal viable product, your sort of sales force, your business development, your revenue generation, and profitability, what people found very quickly is, as you saw capital coming in space and trading volumes or just interest, these companies were very quickly growing and very profitable, very right away. And that was something most investors hadn't seen before. And so you had these companies that were, in a sense, like have a revenue generation and P&L like a mature tech, but was only a couple years old. Like you can be an OTC trader or an OTC desk and be profitable in about 2 months. And so the valuations were astronomical, right? And by the way, the global economy is flooded with capital. And what happened was, I think that you saw a number of traditional players, traders coming in the space, and ultimately, the maturity wasn't there, and we keep talking about governance in the last couple of days.
Right.
The governance wasn't actually put in. The risk, the operations and the pace, didn't meet the risk management that was required to develop of more mature firms, and that's been a significant hiccup. And I think that's been some of where a lot of the trust has actually eroded. But once again, when you look at especially finance and all the structured products and the things that happened, pre-financial crisis, there's a pattern recognition here, that's
it's absolutely true. And one of the things that I thought was really interesting. So I entered the world of fintech, really sort of focused on market data and information in 2009. And the recovery of these asset classes and of really the financial institutions that were impacted by the crisis, really it was kind of startling to me, not being from the industry, how important the collaboration with policymakers and regulators was. And you've all heard that today. You heard it yesterday as well from some of the private sector folks. I think Noah Perlman talked about it. But we spent so much time in Washington, and the rules and regulations that sort of came out of that financial crisis were the financial institutions that are regulated in that way went into being regulated over a long period of time with eyes wide open, because they were engaged, right? There was a tremendous amount of education. They needed to provide more transparency. These were, when we talk about structured products and alternative products, they're not traded on exchanges. There's no transparency. So it's actually even, those asset classes are way less transparent than crypto. But the education required at that time was incredible. I don't know if you have any.
Well, I just think that you also had at that time, you had these prolific, senior people with a just tremendous amount of historical finance experience, because there had been an evolution of structured products, right? They were based off of debt and loans, and so there's a traditional sort of foundation or mortgages to understand. This is now, on whatever stimulant drug you want to name your choice, pick that and accelerate that with technology, right? And so but I think that one of the most fascinating aspects is like you've now, we can dive on this later, but like you've commercialized an aspect of cryptography.
Yeah.
We've talked about like issues around KYC and AML and authentic authorization, and like you've now added this transparency layer where you didn't have transparency on some of these structured products or financial products, that's now been commercialized. The use of multi-party computation for MPC is actually incredibly secure, and that was developed because of this commercialization of crypto. And I think as we see this asset class and this market infrastructure that's developed, that's now global, right? Where the financial crisis, it was very US centric.
Yeah.
This is now global coordinated efforts that moves much faster. Where we struggle across most institutions is just how do we assess risk, right, to get comfort. And it takes a while to sort of that matriculate and educate. You had movies like The Big Shorts. You had so many books on the financial crisis. You had HBO specials on talking about mortgage-backed securities. Now you have to, we'll see what movies develop over the next few years, but now you have this massive education of combining those types of assets, but enhanced by this technology. And at the end of the day, we talk about this quite a bit. It's like, do you believe the world in the future is becoming less or more digital?
Right.
Right. And at the end of the day, we're talking backstage, and Amazon came out when I was in college, right? And I thought I'd never buy anything on the internet. And now I have to look, if I have to put historical previous addresses, I have to look at my Amazon account to look where I lived over the last 20 something years, right? Facebook and social media was very new to me coming from the military because we talk about operational security. Now, I look at Instagram all the time because I have a newborn, so we look at baby products and who's doing what, right? So, I think there's a pattern recognition of technological adoption, and there's this massive proliferation of information. And so why hasn't that extended with less friction to just our basic economic foundation? And I think that, asset transfer. And I think if you travel overseas, you wonder, why am I paying so much money to transfer, dollars into euros or sterling? It doesn't make sense. Or if I want to transfer money or buy something out of the US, or just wire transfer $100, why does it cost me $25 and it take 3 days? So.
Yes, there are myriad efficiencies and solutions for crypto and blockchain technology that are really exciting for globalization. And I agree with you. I think we're a digital world already, and the last part of the equation is what's going to be the Internet of Value, and we're excited about continuing to help the industry progress in that direction. I in my notes here, I called it world domination, but I figured there's a lot of regulators and public sector folks in the room, and I should not use that term to describe crypto. But I did put it in my notes, so I probably shouldn't admit that. But tell me sort of a little bit more about how companies who are in the analytics space, this is a bit of a self-serving question, can help here, because I've had the experience in my last at my last company, but we have spent a lot of time with Ed and with his peers at other financial institutions talking about how we can help with banking companies that are maybe seen as riskier, with helping with regulators. So how can analytics providers in this space help?
Yeah, I think that first off, if you're new to crypto or the sector or the technology, just like anything, any new technologies can be incredibly intimidating. And I think that as you're looking at the sector, and one of the inherent selling points of the sector is supposed to be transparency, right? It's a public ledger. There's supposed to be immutability, so it should be more secure. Once again, it's this commercialization of components of cryptography. Right. Now, when you add that into business models and companies, and I 100% understand where regulators are coming from, in the sense of how do you diligence these firms that now incorporate these technologies within their financials? So if you have stable coins or crypto assets on balance sheet, and the way I looked at diligencing firms was more from a credit perspective as opposed to an equity perspective. So when you're looking at credit perspectives, you are looking at balance sheet metrics as a important aspect of thinking about cash flows and being able to maintain that, not necessarily the high growth. Of course, crypto firms are mainly high growth, but when you take a lens and look at the balance sheet, then you think about, okay, if a crypto firm has, or any firm, doesn't have to be a crypto firm, any institution has a digital asset as a liability or an asset, then shouldn't there be more transparency, right? And shouldn't you be able to see those capital flows moving with better ease instead of waiting for a quarterly financial statement? I mean, we just had obviously a significant issue with, as we talk about trust with some banks. And as you think about banks and like the reserves and capital and like what that transparency is, if you think about just diligencing companies that operate and you're invested in, or you're as a counterparty, crypto is supposed to be able to help, allow you to interpret that or see that and have more comfort and confidence as in those relationships. I think where we're developing is trying to build, instead of innovation on innovation, instead of just building a new chain or building something that's really esoteric and sounds more structured or financially interesting, it's like building the basics of, if it's inherently an automated ledger, then accounting should actually be automated, right? Building the wallet security infrastructure, building those things not just for crypto layer one protocols, but building for real world assets, which the security measures and processes around these are significant, slightly, but importantly different, right, than a base layer software, right? So if I wanted to tokenize an LP or any real world asset interest, I can't just lose my private key, right? And if I'm an issuer of that, you can't just not be able to find that. Like, there has to be this compromise of distribution, but central admin to be able to trust, to be able to reissue that wallet and move that asset over. Those are things that are somewhat not exciting, but like as you see more traditional finance institutions or traditional institutions coming in, commercial institutions or consumers like Starbucks or Nikes or whatever, how are we working with or providing that product market fit to that? And I don't know if I actually answered your question, but
well, I'm gonna summarize what you said, because I think it's really interesting. We spent a lot of time today and actually yesterday talking about financial crime, AML, money laundering, sanctions, fraud. Those are all really sort of key, and that and cybersecurity, right? And so those aspects of what we do every day on blockchain, whether we're a crypto company, a DeFi protocol, are really important, right? That's sort of, I think, she didn't use the term, but I think this morning the commissioner of the CFTC said table stakes, right? Those are table stakes for us as an industry, is sort of managing through that piece to make sure that we know who we're doing business with, or we at least know that the company that we're doing business with is not a terrorist organization, right? And I think that is table stakes. But what's interesting about what you're saying is that particularly as we think about maturing this industry, building controls, thinking about value really being exchanged sort of worldwide, instantaneously, and becoming the infrastructure for a big part of the economy, we also need to be thinking about market risk, right? And this is the piece where, so when Ed says due diligence, what he's thinking of is this company that I am going to be holding their funds, or advising, or working with, or trading with, is this company going to be there in the next year? Do I understand sort of where they are, what they're doing, is there credit risk, is there market risk in the transactions that I'm engaging in?
Absolutely take this to, once again, I think pattern recognition is incredibly important. So we take this back to the financial crisis and what caused financial crisis. there was $1 trillion worth of mortgage-backed securities, and basically the value of those were completely in question because the underlying mortgages were uncertain and whether the default risk was there. And largely that was run up because people were underwriting mortgages without checking the information and just basically know your customer, right? So if you, like, people own homes, do we find mortgages to be the faults? Like, are they contagious or are they problematic? Mortgages, obviously, or home ownership is not a problem, should not be a problem, but underwriting those mortgages and not doing it the proper way, that was an institutional failure, right? And then and banks clearing those and packaging those and selling that off was another additional institutional failure, right? It wasn't the mortgage's fault, right? It wasn't the home's fault. So, I think about when we think about companies that are interacting with this technology, I think the way you should be protecting, once again, I think Commissioner Romero put it like the best is like, who are you protecting? You should be protecting customers. You should be protecting clients. And it's just putting safeguards to protect people, right? And that's, I think that once again, it comes back to definitions and semantics in a way, because I feel like sometimes we talk past each other. Crypto is a very broad term, right? It's a very broad sector, right? It's just like saying finance. And I think that we have to think through of like, there's the technology, but there's business models and the consumers and engagement and how we think about that. And it doesn't necessarily mean a blanket dismissal or blanket disapproval, just saying the word crypto, right? Or digital assets or blockchain, right? So.
Yeah, no, that's absolutely right. So in the last couple of minutes that we have, we knew this was going to go quickly. I would love to hear, in your sort of open thinking, what are you excited about for the future of crypto blockchain technology? Someone with your sort of history and background, what makes you excited about what's next for this industry?
I mean, there's so many aspects of this of this technology that can be so useful, right, for society. I mean, I think, how do we put it? I'm a very practical person, so I think about it in very practical terms, right? Just like how you store your own wealth, right? I'm not talking about Bitcoin or Ethereum. I'm talking about how you store your mortgage, your identity, your assets, per se, in a secure fashion. How do you transfer it and move that with like clear authorization and identity? How do you think about cross-border? How do you think about that technological proliferation? If I think about the difference, we think about when we have smartphones, either you have an iPhone or you have an Android phone, like no adult person doesn't utilize that, that form of communication and that information proliferation. And I think this adds security and actually movement of that with so much less friction. But by the way, should bring a lot more agency to your ownership without leakage of value, right? And I don't want to, I hope I'm not speaking so vacuously, but if you think about the $210 trillion worth of assets, right? And crypto being $1 trillion approximately right now as just software. Then think about the ease of being able to track that and acquire that or transfer that of everything you own.
We recently sold a car to friends, which should be a really easy peer-to-peer transaction. And the amount of paperwork, the visits to the DMV, the insurance conversations, I mean, I just kept thinking like, this seems ripe for an upgrade. So thank you.
Can I add one thing?
Yes, absolutely.
I'm just going to add one very practical point. And this goes back to my military time. I remember when, a ship had all the files of sailors or Marines, a destroyer had files of sailors and Marines, all their records, medical records on ship, because you had to have those. And I remember when they switched all those documents to CDs and CD-ROMs, I think it was something like 1999. They did it with the first destroyer. I forget which one. I want to say it was a McCain. but it lifted that destroyer out of the water 2 feet.
That's unbelievable.
Like, that's just a practical application.
We're gonna leave you with that image. Perfect. Thank you so much. This was so great.
Thank you.